Alright guys, this is Abe Forest again today. Today 14th July 2026. I'm simply sharing my thoughts as regards the market, starting from the precious metals, stocks, crypto, currency and commodity. Now, looking at my screen, I'm going to be starting with the precious metal, which is gold and silver. And we'll notice that in 2026, gold has not actually been so positive in the aspect of, everybody knows that gold has been in an uptrend for quite a number of years now. So on the longer term, you notice that gold has been going on an uptrend. But this year, there's kind of steep movement towards the downside as regards gold, the precious metals, both gold and silver. Now, why is this? Is because of the Iran war that is happening in the Middle East. And we already know that it's not a news that the American government and Israel, coupled with Iran, have been in the loggerhead as regards the war, and that has always have an effect on gold. Everybody knows that gold has been in a uptrend, and in this type of geopolitical tension, gold is meant to be rising, it's meant to be going in the upside, giving us higher highs and higher lows. But the reverse is the case. We already know the reason why this is like that is because of the oil shock that happens from the Middle East, and there's a little bit of that we don't have that. There's been a short in supply of oil from the Middle East because the Strait of Hormuz has been locked down. So that's not news. We already know that in the first place. And gold has actually been dropping. Now this morning, gold has actually hit a major low of $3,942 per ounce, and that is as regards gold. Normally, gold is meant to be rallying up to the top because of geopolitical tension, and it's not like that because of it has a direct effect on the Middle East, and the major revenue from the Middle East is oil, and there has been a short in supply of it. So that is one of the reasons why gold has been coming down. Now it has dropped more than 50 something percent from the beginning of the year, so it's not a news, we know that already. So and we'll notice that we're expecting, normally looking at this chart, we're expecting for quite a number of weeks now, the market has been rejecting this zone, you understand? So we're expecting that gold will keep going on, creating another lower high, but we're having a double bottom at this point for quite 2 weeks now. The market has not left this zone, and that in itself, we know that oil has been rallying up to the top because of the shock in oil supply. But after the when the war started from February, we noticed that there was a jump from I think $67 per barrel up until $115 per barrel. But now it has dropped down because of the escalation and de-escalation from the Middle East. But over the weekends, the president of the United States of America has said that there's no going back, that he's not going to be having a ceasefire deal or agreement with the Iranian government, and that in its own has made the oil market begin to go to the upside, because it's an inflationary metrics. Oil has been an inflationary metrics over the past couple of months now, because the short in supply of oil has actually increased the prices of oil, the reserves all over nations worldwide. So that's about oil. Now silver also, which is the same thing as the precious metal, we have gold and silver, and silver too has been, it looks like gold anyway, so coming to the downside, as the case may be. So we'll notice that this inflation story is written by the war in Iran, and the effect we are seeing in the market is on silver, gold, and on oil. So the inflationary metrics can be traced to these three items, as the case may be. So though it's meant to be having an effect on the indices and the stock indices and the rest, but because of the AI story that we have, as regards the what do you call it, the AI revolution, you would notice that despite the inflationary story that we have all over the places, you would notice that the stocks are not bowing down to that pressure, and that's because of the capex spendings. So much amount of money has been invested in AI. When we talk about data center, one data center can take more than $100 billion in building, in constructing. So majority of all these hyperscalers are investing heavily in what? In AI. So that is the reason why the effect of the war is not, you can't see the effect of the war on this stock market. So because of that, though in the first place there was an effect, but when there was so much companies, the hyperscalers requesting for more money to invest in the AI, so it has skyrocketed. Now XPX, which is S&P 500, the major benchmark of the 500 top companies in America, is giving us an upside move, and the challenges that this S&P 500 is having, which is the bottlenecks, which we can trace back to energy and memory, and because AI requires high energy and also requires high bandwidth memory. So the stocks like the Micron technology, what do you call it, SanDisk, are at the forefront of the memory build out. So they're having a positive scenario when it comes to Micron and also SanDisk. So the reason why I drew this arrow down to this spaces, if by adventure we have a challenge and that there's a bit of people are saying that the AI, there's going to be a bubble burst, that there's not going to be a continuation, so many people have been having that opinion. So if that is the case, then we could actually have a pullback into this trend line, which we already have in the previous weeks. If you look at my chart closely, and there was a bounce from it. But if that does not happen, if the spending is increasing and there's so many data centers are being built all over the places, then we should still expect that the market is going to bounce from this white line, which is my support. Then the market will keep running up to the top. But if the challenges, the bottlenecks are beginning to give a crack in this AI revolution, then we should expect a pullback into this trend line, which actually coincide with a major support, which was the previous high support support we have when the market broke out from this point. You understand? So we are expecting a pullback if the AI revolution begins to have a crack, as the case may be. So that's for S&P 500. Now looking at Nasdaq, which tracks the tech companies, the 100 tech companies in America, has the same story, because majority of all these tech companies are ranging from Google, Nvidia, Microsoft, Micron, and the rest. These companies, their capitalization market is more than $30 trillion, as the case may be. So that story on its own is not having effect due to the war that we're having. We are not having the effect. The effect of the war is not affecting the stock market just because of the AI revolution. So, but if the challenges that the AI is having, which is the bottlenecks like the memory and energy costs, then we could have a pullback into this same point and a reaction from the trend line coinciding with a support zone. Then we can have a pushback to the top if we're having a challenge as far as the AI evolution is concerned. But if there's no challenge, and probably as they're asking for more money, investors are still bringing out money, and then that means we're not going to be seeing a pullback. That means the market will keep on rallying to the top. We don't know when it's going to pull back, but we know very soon there's going to be a major pullback in the stock market. Same thing as the Wall Street stocks, which is Dow Jones, which has a similar case. But Dow Jones has actually bounced off the support zone, and since then it hasn't created any low. You understand? So you're having higher highs in the Dow Jones. So that about this market. I've talked about stocks. I don't want to be talking about the stocks individually. That was one of the reasons why I picked the stock indices like the S&P 500, the Dow Jones, and also the Nasdaq. And I already talked about gold, which is commodities, and talked about silver, and also talked about oil. The major catalyst for inflation is oil at this point in time, so there's no two ways about that. Okay, let's talk about DXY, which is the dollar index. Now, the dollar index too has been in an uptrend since the inflation story, since when there has been the escalation of this war, when the war started. If you look at it very closely, the dollar index, which has been in a tight range for quite a number of years, has actually broken this tough resistance to create another high. Now we're having a pullback, expecting the market to blast through the upside, because as the Middle East war is still ongoing, then it's strengthening the dollar. And because gold is moving to the downside, it's not attractive for investors. People rather go to buy the American bond, which is the treasury yield, treasury bond for America, which is the 10-year treasury bill, which I'm going to be showing you in a while. So the 10-year yield is giving us a upside move, because of people rather not risk their money on gold that has an uncertainty at this point in time, but they rather delve into what will give them a percentage that is going, because the more the gold goes downwards, the more people delve into what the US Treasury bonds, which means that they are getting a higher percentage with risk-free amount, unlike buying gold that is not attractive at the moment. You understand? So that is why you find out that the market is going up to the upside as far as the 10-year yield is concerned. DXY is going to be strong because the emergence of people going to buy more bonds is going to strengthen the dollar, strengthen the currency of the American currency, which is the USD, and that is the DXY, as the case may be. So that is what I would want to talk about as far as this market is concerned. If you have any questions, if you have any challenge as far as trading is concerned, kindly send us a DM or kindly send a message to us on WhatsApp on +234 805919254. There's something I used to tell people and my students, is that before you can trade in this forex world, you need to understand so much fundamentals, because that on its own is going to give you an edge over other people that are just trading technicals. It's good for you to understand the technical analysis, understand fundamental analysis, and also the sentimental analysis. But majorly, technical analysis is what people do, and if you want to learn more, you need to understand fundamental analysis, and that is where we come in. We can teach you all these things so that you can make informed decisions in your trading or your investing. I'm going to see you guys in another episode. See you guys later. Bye bye.